All right, so I was going to record a London session recap for today, which is Thursday, the 21st of July, 2022, for the London session on Euro Dollar. However, I think there's quite a lot of good mini lessons in here, particularly with utilizing the internal framework. Now we use right mapping internal structure and looking at order flow, as well as utilizing the M15 Frenchies, potentially even the M5 as well. I just think it would be something that might be some good evergreen content to add to the course. So going to do it a bit more detailed. Going to try and take my time with it, go nice and slowly, build it from the top down from a completely blank chart. Cool. So don't need to overcomplicate the higher time frames. You can see we have been selling off for a very, very long time. We are in a clear bearish trend. So I'm just going to quickly draw on our daily swing structure, as this was our last daily swing break of structure there. Okay, so we can see that we are currently trading from this swing low, from the swing high to the swing low. Okay, and we are starting to pull back. So obviously, we can start to map out our POIs up in that daily premium that price could potentially pull back to. Okay, and that's what we'll be looking for, as there isn't really much. Nothing too significant, at least from the daily perspective down below here. We do have these buy to sell wicks, which yes, is a valid daily POI, right? But it's more of a, what we call a fractal POI. It's a way of seeing a 4-hour supply zone, but seeing it on the daily chart. So in terms of the daily itself, I don't expect it necessarily for it to form the daily lower high here. Of course it can, but this would be a lot more significant from a daily perspective, right? These big, nice pivot candle POIs up in the daily premium. Okay, we haven't either broken any structure on the daily chart on the way up either, because all of these candles break the prior candles low, so we don't really have a chock or an IBOS or anything like that to work with the daily chart. Okay, so kind of the way I view the daily chart at the moment is there's every potential that we could pull up to these more sort of premium levels of supply, but yeah, we're trending heavily to the downside, so we don't have to, and we could go from here. Now if we dive into the 4-hour chart, I'll just quickly show you how I was mapping structure. I won't spend too long diving into this because it's not the main point of what I want you guys to get from this, but this was the last swing pullback that I had. Then we switched bearish, okay? So then we had this low high and this lower low. Now some of you may have mapped it this way and had to continue down, so that'd be a swing high. Some of you may have mapped it a little bit tighter, had that as the bullish break, right? And then we end up switching bearish here anyway. So it would still give you the same swing high either way you did that. So for all intents and purposes for today, this is where we have our swing high and our swing low. Now I've spoken about this in a lot of recent content, but I appreciate people watching this at a further point in time may not have seen the recent trade recaps and session recaps, so I just want to kind of quickly discuss. Just going to turn this to a 4-hour POI. Discuss sort of a little bit again here. I think it's a good opportunity to talk about swing mapping here. So some of you, maybe if you're a bit newer, or if you're still using pip rules, maybe you're wondering, why isn't this a swing pullback, or why isn't this a 4-hour swing pullback? Okay, I'm choosing to focus on the larger, bigger swings because for me, relative to recent price action, it makes a lot more sense, right? Rather than calling that a 4-hour pullback. And this is also where, if you understand internal structure, it doesn't massively matter kind of whether you're a bit more loose with your swing high and your swing low like I am, or whether you want to be nice and tight and you want to count this as swing structure. Because for those of you who count that as a 4-hour swing pullback and then the 4-hour has switched bullish for you, I'm viewing that as an internal break, okay? And I'm happy to then follow those internal breaks of structure and trade in line with that. Even though you're viewing that as swing structure, okay? It doesn't massively matter because, okay, let me explain it even better. Let's say you are someone who wants to view that as a swing boss on the 4-hour chart, and you also want to view that as a swing boss, right? Those are significant enough. Whatever rules you want to use to derive that, or whether you're just using a bit of discretion. And now when we get that bullish break to the upside, that's switching bullish for you. Well, you still have to kind of use a bit of nuance and realize, well, this is one big leg here to the downside. So yes, maybe the 4-hour has switched bullish for you, but you're always aware in the back of your mind that as price pulls back up to these premium levels of this leg, right, up into the EQ of this leg, that it's likely the 4-hour chart could then switch bearish for you. So you're just aware of that in the back of your mind. And if you're saying, getting longs from within here, you're not trying to shoot for the moon, right? You're always aware of the bigger picture. And that's why it doesn't massively matter if you're a bit more conservative with your mapping like here, or if you're a bit tighter, especially now that we are using those internal frameworks, okay? So for me, I counted this as an internal breaker structure here to the upside on the 4-hour chart. All right. And now I'm going to follow that 4-hour internal structure. So, what's the basic framework that we use with the internal structure? Well, a swing pullback is only confirmed as starting or ending when we get an IBOS. Okay, so when we got that bullish IBOS at this point here, that was that true confirmation. Okay, now we're going to have that larger swing pullback of this swing leg here. Right, so we expect that to continue, and it's only once we get that bearish IBOS, right, that now we get that confirmation that this swing pullback is likely finished. And then what do we expect? We then expect those bearish internal ranges to hold, order flow to be respected until it takes out that swing low, right? Until it takes out the start of that bullish internal leg there. So that's basically it. So we can look, or at least I will be looking to continue to buy these internal ranges, to continue buying from these strong internal lows, targeting these weak internal highs until otherwise. Obviously, we can use other confluence to anticipate when that may change. We never assume that structure will change, i.e. like we can see supplies here. I'm never just going to say, right now, I'm just going to assume that this is going to go. I'm aware that it could go because there's more bearish confluence now to anticipate that move may happen. But until that goes, we don't have true confirmation, true structural alignment that now we can expect that low to go, okay? So kind of coming into today's session, we can see that we have this level of 4-hour supply here. Is it the best supply in the world? No, not really. It kind of just broke this minor low here. We don't have a lot of data to work with to the left to kind of anticipate exactly what it may have broken or what it may have flipped. Is it well priced? Well, if we take the swing high to the swing low, let's put on the range. Not quite at the EQ. I'm personally not like a true stickler for the rules in terms of that. It has to perfectly tap the EQ or go above it for it to be premium. For me, it's a rough guide. It's reasonably well priced, right? That's a decent sized pullback roughly to the EQ point of that leg. Okay, so that's another tick in the box for why potentially the 4-hour lower high could form from here, right, and go to the downside. But yeah, it's not the most amazing of supply zones in the world. Whereas, like I say, we'd come up to here where we have this clear strong move to the downside that broke significant swing structure. It's also nested within a daily supply zone. It doesn't have any inducement and it didn't sweep. There's other things that are negative about it, but the key is this would be somewhere where I would have a lot more confidence, let's say, in confluence that the swing lower high would form from here and go rather than necessarily a place from down here, right? So let's just kind of map this out a little bit more. So we had another internal breaker structure here. Okay, so for me, this would be the current 4-hour internal range that I'd be looking for price to come in, which means this is a strong 4-hour internal low. So from an internal structure perspective, what do we expect? We expect price to come into this low, potentially mitigate demand, and then continue up, right? And it's only once we get that break of structure, then we can start to target this low. But like I was saying, obviously it's sometimes we can anticipate and get in short and anticipate that this low might go. There's not really too much else to say to that. So what do we have? Well, when price came up into the supply zone here, you can see how we had a sweep of liquidity there. So I'm just going to draw that on, which then led to a 4-hour change of character. So we have a 4-hour choke. We pulled back, then we took the high, and then we took the low. So technically it would be on that inside bar by the looks of things, but I'm just going to draw it on this low here just because it's a little bit more of an obvious and clean choke. Okay, so I think the true choke would be on this inside bar, but let's just put it here, right? It's just a bit more of an obvious and clear break of that low there. Now, what do we know? We know that change of character just signals the start of the internal pullback, right? It does not signal the start and end of the swing pullback, right? That's the framework that we now use. Chock signals the start and end of internal pullback. IBOS signals the start and end of a swing pullback, okay? But what does that chock give us? Gives us, although it signals it's the start of this pullback and potentially we can then look for shorts into this low, it's the first early indication that potentially we may start to see that movement there, okay? So obviously we can take some shorts and anticipate that may happen, but you still then have to trade through that strong low if that's what you want to hold and manage your trades through. So how do I approach that situation? Well, I'm happy to look for shorts, but I'll be targeting this strong low, and then I'll also look for longs as well, anticipating that internal structure is going to continue. Whereas some of you may want to do that. You may want to take the short to target into this low, and you may want to hold a little bit of volume if you have high confidence that that low is going to go, right? But I probably wouldn't have high confidence of that until we came up to these sort of more premium levels. So coming into London today, I was looking for a short to trade into the long, right? To then potentially look for that movement there, okay? And that's basically it. We just can outline the possibilities, be open to both scenarios, and kind of just follow that framework. So obviously we have this 4-hour demand, pivot demand as a pretty decent level to target shorts and to look for longs if that is going to continue, right? So what else do we have kind of before we start using bar replay for the London session? Well, we have this unmitigated wick here, and then we have this level here, right? So this wick. So it's not the cleanest of POIs, it's not the strongest. All it did was literally break this fractal low, right? Break this low here, but it is valid supply, which we've just refined to the wick. So these become two decent areas, at least from the 4-hour chart, where potentially we could look for that pullback into this level, right? So hopefully now you can see how we're kind of starting to build a bit of the picture. So yes, shorts are against the internal trend, but obviously they're pro the overall swing trend, and we're coming off a level of supply, right? I'm just trying to think if there's anything else I wanted to add to the 4-hour chart at this case, but that's pretty much it. Hopefully it's kind of clear of the framework that we're using. Assuming that the internal structure will continue until it doesn't, and then looking for a short into this level. Sort of other main negative confluence to shorts at this point is obviously price is tapped into this prior internal demand range, right? So obviously price does not have to mitigate this refined level. Now we pull back into this range, shorts become slightly lower probability because now that 4-hour internal high low could be in place and it could be ready to take out that weak 4-hour internal high, right? So obviously when price comes into this prior range, shorts are a lot lower probability at this point. And also, if you think about it this way, like if you map the premium and discount of that internal leg, we're obviously like well below that. So it's up to you, whether or not you want to short for that. For me, I'm happy to do so, especially using the lower time frames, as confirmation following that order flow and structure on the lower time frames. So if we go down to the M15, just going to refine this a little bit so we can keep it nice and neat for my chart OCD. So swing structure. This here for me was not significant of a pullback relative to recent price action, right? You can see these big swings in price. Just going to leave this for a minute. So if I just zoom out on the M15, this is how I've been mapping price action, right? We have these big swings, so one push down, then we have this swing pullback here. Whoops, so we have a movement down, movement up, movement down, movement up, movement down, all right? Then we switch bullish here. That for me is a swing pullback, and then that's one leg. So you can see if you look at the recent price action, why that for me, I don't personally want to map it that tight. If you do, that's fine. Just obviously be aware of what I was saying at the start of this lesson, that the trend may just change a little bit more frequently for you, and you always have to be aware in the back of your mind, looking at the bigger picture, right? So what do I mean by that? Well, let's say you mapped this as your M15 swing low, right? So then that was your swing high. Then we switch bearish here. So you can understand, right, that's another swing boss. So this would be your swing high and your swing low, but you're also aware of this bigger leg here, and you wouldn't be surprised that if price came into here, potentially it could switch bullish, right? You're always kind of aware of that bigger picture if you're going to map your structure a little bit tighter. So that was a swing high for me. This, could also be enough for a swing pullback, but it never broke above or closed above the high either. And then it's only once we had that pullback there, okay, now I can map that as my swing high, okay? So yeah, I probably, if that hadn't pulled back, and then I'm just gonna move this other way, broken closed above that high, then yeah, that probably would have been swing structure for me. I would have been seeing that as pretty significant compared to recent price action. And if we had a close above there, then that would have become lowest point, my swing low, and then that would have been a break, but it didn't, okay? So it's only once then we start to pull back. Again, that's enough of a significant pullback. Now I can mark that out, as my swing high. It was a bit more significant, this one, right? So it's clear swing high there for me. So I'm gonna map this as my swing range up here. Where are we? M15 swing weak. Okay, that took me far too long. And then this being the swing low, obviously the lowest point that had that last breaker structure, which is our M15 strong swing low. Okay, so now we have our M15 swing structure, but we can also look at mapping out our internal structural ranges, right? So we can have a clear movement down, clear movement up, clear movement down, okay? Now, I get a lot of questions about this, understandably, of, exactly kind of where should you start mapping your internal structure. So for the majority of you, I say when it's clear like this, just focus on the recent price action, and you can see we've had that movement down, we've had an IBOS there. I would just keep it nice and simple, right? And then you can see we've had another IBOS here, right? But some of you may also want to, look at the recent price action and kind of follow it along like we do with swing structure. And you can see we had that internal pullback, that movement up, that pullback failed to take out that low, so then we continue bullish, right? And then that would be your internal break there, okay? And that's absolutely fine. I'm personally at the moment, I'm aware of both. Sometimes it's really kind of obvious and clean like this, so it's nice. But if you ever find it a little bit confusing and you're not quite sure, I would just always say focus on the recent price action, and you don't need to overcomplicate it too much, okay? So let me just put on our pretty little circles because I know that can kind of help you guys to visualize it too. So this has been sort of the large internal structure that we're within. So at this point, what do we have? We have our M15 internal low being the weak low, because obviously the internal structure is bearish at this point. And then we have this as our strong internal high. Here we go here, okay? So we've got it all mapped out. So again, what's the framework that we use? Well, we have our, again, let me put these dots on quickly. We have an M15 swing trend as bullish. So this is our strong swing low, and then this can be our strong swing high. The internal structure is currently bearish because we've had that switch bearish to facilitate the swing pullback. So at this point, what we expect is if this low is going to go, then these ranges need to hold, right? This should hold until it takes out that low. Obviously, as we come into that strong low, this strong swing low, we would expect that that's not going to happen. And that's why we then can wait for the bullish IBOS, because once we get that bullish IBOS, the internal structure is now aligned with the swing structure because they're both bullish, which then indicates that the swing pullback has now ended. So again, to keep it even more simple, what do we use to signal the start and end of swing pullbacks? We look at the large internal structure, right? We look for IBOSes. So if we get that bullish IBOS, now the internal structure is aligned with the swing structure, that signals the pullback is over. And now what do we expect? We expect those bullish internal ranges to hold until it takes out the start of that bearish leg, right? Which will be that weak swing high, okay? So that framework allows us to trade counter trend. Obviously, you still have to look for all of the confluences, and there's certain times in which you might want to do it, i.e. we're coming literally off this strong low. But at this point, there's still room for us to come down into this level. We do have to be aware that the swing high low could be in place, right? There's some very sort of minor wick demand there that are rejected. It's in the discount. There's always a possibility that that could switch bullish. But until that happens, especially with the risk to reward, even just to here, right? I'm happy to follow this internal structure. Nice, clear, big structure, right? Mitigated this level. It's clearly a strong internal high. Also, bearing in mind, remember on the 4-hour chart and the daily chart, we're heavily, heavily bearish, and we've come off a reasonably well-priced POI. Is it the best POI in the world? No, I've already talked about that. Is this the best 4-hour POI? No. But, ultimately, there's a decent case for a swing lower high to form. Like I said, we don't get true confirmation until we get that 4-hour IBOS. But you can see in this particular scenario, it's always a case-by-case basis why there's a lot going for the bearish case scenario, even just to play a move down towards this weak internal low. Okay, so hopefully you can understand how I've mapped it up until this point. Hopefully you can understand the framework that we use on each time frame, with how we utilize the internal framework to help us understand the start and end of swing pullbacks and what we understand, right? So yeah, if you're lost at this point, all I would want you to get from this is our internal range. This is a strong internal high. Price is coming up into this internal high. So I'm happy to look for shorts from within here to target this weak low, and then potentially wait for price to come into here, right? And then we can look to trade from this strong swing low, depending on how much confirmation you want. Some of you will be happy to look for an M1 entry model straight away, following the M15 swing trend. Some of you may want to wait and choose for an M15 chalk, right, which will signal at least the start of that internal pullback. Some of you may want to wait for an IBOS, right? So maybe we'll get get rid of some of this. Maybe we'll get a movement like this, right? And then you can get that IBOS there. Now everything's aligned, and then you may want to wait from that, right? There's obviously loads of different confirmations you can wait for. So I'll leave it as there. I don't want to overcomplicate this any more than it needs to be. So we come up into this extreme M15 supply level here. Okay. Now, some of you, again, I always try to encourage this, can take this as an M15 entry. Now, whether you want to enter on the distal, 25% of the zone, or the EQ, or whatever, I'll leave that up to you. But even just targeting there, right? Very, very decent trade there. Okay, cool. So I'm just going to zoom into this internal range now, as this is pretty much what we're working with for the session, but hopefully you guys can completely understand sort of the higher time frame outlook at this point. So coming into Frankfurt Open, right, before London Open, what do we have? Let's draw on a confluence. Well, we've kind of got this M15 structural high here, right? Nice bit of liquidity that has been swept. All right, and we have this little high here as well. So there'll definitely be some buy side liquidity that price can now tap into for this M15 POI here. We do have to be wary, right? We did have this supply here, which price came into, reacted, and then has now given us a supply to demand flip, right? So I'm just going to draw on that from the high to the low, and we have that there. Okay, so you could keep things super simple, and we've come into this strong internal high and look for shorts, and that's basically what I was doing, right? But if you look at my pre-session analysis, you will also see that I'm wary of what? The smaller bullish internal structure, right? Because this is where the market is fractal. So like I was saying, we have the swing structure, which we know is bullish, right? And then we're having that swing pullback. But in order to facilitate that swing pullback, we have the larger bearish internal structure, right? So then we're looking for that lower high to come down. But then what do we have within that? Within that, I'm just going to change the color. We have that small internal structure, which is currently bullish at this point. So what can we assume? Well, not assume, but what's the framework we can use for that? If you want to, be super accurate, is this orange large internal pullback will only be confirmed as ending once the small green internal structure shifts bearish, right? Once we get that break to the downside. Once that happens, now the small internal green structure is aligned with the orange structure. So now that larger orange internal pullback is finished. I would expect these small green internal ranges to hold until what? Until it takes out that week low, right? You're not always going to need to wait for all of that much confirmation. Obviously, again, it's going to be case-by-case basis. How big is the range? How expansive is it? Is there enough risk to reward to get in short before you come into this low? But these, once you understand the framework in its most simple form, you can just apply it to, as many ranges or to as much structure as you need to on a case-by-case basis, right? So I don't know, hopefully kind of makes sense as to why now if I play this forward a little bit, when we then come down at this point, as Frankfurt opens kicking in, what do we have? Well, we have a bearish change of character, right? So we do have a change of character here. But remember, change of character only signals the start and the end of the internal pullback. So yes, technically this is one internal pullback. So you could say, right, well now we've had a chalk, so this pullback should be over and we're going to go. But if you kind of see where I tried to separate this out in the theory lessons, I was saying there's going to be certain times where you have big internal ranges like this, because this is quite a big one, right? And then you have clearer small internal structure within that. And in this case, this is where I would interpret that chalk as just being the pullback of the small internal structure, because we're already here, right? We're already into that strong small internal low. There's no risk to reward in this case. So that's why this chalk does give you a valid another M15 supply here, right? Essentially the confirmation entry of this larger level. So again, you're well within your rights to then get short within this M15 POI, and that's what I was looking to do. But as you would have seen in my markup, my pre-session analysis, I also had this small, let's use this color here, right? This small internal structure drawn on as well, which really, because there's hardly any risk to reward to get short into this level now, it's going to be a lot higher probability, as I said, to wait for this low to go, right? If you want to wait for more structural alignment, because once this low goes, then we have everything aligned. The small internal structure will be aligned with the larger internal structure, and then we can look for those movements there. Now, the problem is sometimes you get more confirmation, it's not always going to pull back and it might just dump. But, in this situation, we've had the chalk, we're confirming this level, okay, great. Maybe you don't want to wait for that much confirmation. But in this very specific scenario, what's happened? Well, we've had the pullback into this level. So now as price is coming up to then tag you in, right? This is what I was doing, looking to get short from within here. You're trading against this demand. You're trading against bullish order flow being intact. And at this point, this is a weak, small internal high because it's failed to take out the low. So as price is mitigating demand, picking up those orders, continuing the bullish order flow, if you're setting an entry short here or looking to get short on the M1, yes, you might get confirmation in the M1, right? The M1 might chalk, but this is still, from an M15 perspective, this is still a weak internal high. So you have to accept the risk of trading against that, because of course it could still play out. Yes, it's weak, of course that could happen, but you have to accept that risk, right? So for me personally, in this instance, I was happy to trade against this. I knew that was negative confluence, that wasn't ideal, but because this was a strong high, we come into this level, there was some nice supply, it was quite clear on the M1. I was kind of happy to trade against it, even though I knew it probably wasn't going to work out. But yeah, sometimes you just have to hit it, right, if you like it. But the point I'm trying to make here is just so you guys understand what's going on, so that then you can factor that that confidence into your own decision making going forward. Just so you're aware of it and you can understand, why it was likely this high ends up failing, right? Spoiler alert: price goes up and takes out this high. Okay, so hopefully it's super clear. Again, the framework. We have the large internal structure and we're looking for that lower high to go to target this week low. But because this is quite a large range, we can see that there's a nice clear small internal structure within here as well. And at this point, prices pull back into here. So shorting against this, it's not the smartest of ideas, right? So we drop down to the M1 and I'll kind of talk you through then what I saw. So we have this new M15 supply, even though it is a weak small internal high. So I'm basically just waiting for price to come up into it. Now, of course, you could take the M1 risk entry as well, but with this being that weak high and with this coming off demand, I want to wait for a little bit more confluence and at least wait for the M1 to start to turn. Now, another thing that was really nice here on the M1 is we did have this very clear liquidation of these highs and obviously an overall pretty damn nice sweep of that and strong momentum to the downside, okay? So we moved along. Obviously, what's the bare minimum I need for me to get short is I need a chock on the time frame I'm entering on. So what's the high of this candle is 22.0. High of this one is 22.0, right? So that means that this candle failed to break the prior candle's high because they both traded at the same level, which means it's a pullback because it's not a continuation of the move. So this would be my M1 chock level, right? You guys should be pretty familiar with it if you're at this stage of the course. So I need to see at least that go. Okay, now this high has been broken, which now means our fractal low, we can move up. So I'm just going to zoom in to double check this. All right, and you can see here, what do we have? Well, after this, the paintbrush, there we go. After this high breaks, where is the nearest candle that failed to break the prior candle's high? It's this candle here, right? Because we have the up movement, fails to break that candle's high, which means then we have a pullback, and then we have that movement there. So this becomes our fractal low, okay? So that is the true chock line, right? So if you put this here, if we get a break of that, what have we had? So we move up, do we break that high? Don't believe we do, nope. And then we move down. So now at this point, we've had a chock, okay? So we've come up into our M1 extreme. We've had our change of character. We've essentially had another liquidation of these relatively equal highs here. Okay, that's nice. And we've had a chock, right? Now, regarding the chock, this is where some of you, again, might want to use a little bit of nuance, go, right, that is obviously the mechanical chock. That's where it is. But you may want to see this logo, right? A bit more sort of, I guess you could call it the M1 IBOS, right? Just, especially in situations where you don't want to be super aggressive, you may want to see that go, right? So in that instance, because there's obviously going to be sort of a bit of M1 demand within here, at least that gets spiked through and goes. That's just maybe something. Now, let's say you're happy, you just want to get involved on the M1 chock straight away. But at this instance, I don't have any M1 valid supply. Because although this candle led to that movement, what do we need for supply? We need a candle that's engulfed by, so a bearish candle that's engulfed by a bullish candle, right? So we need a bullish candle that's engulfed by a bearish candle, right? But in this instance, you can see this candle doesn't close below. So there's no valid supply here on the M1. So that would not be an entry anyway. So I need to see a bit more. Okay, so then at this point, all right, this for me was starting to sell off, but then again, we failed to close below, so that's not really a good sign. Okay, this wasn't ideal, but basically because at that point that had sold off, I was also looking at the seconds time frame as well, just to see this. And this looked pretty clear to me on the 15 second, just because we had a series of mitigations. To be honest with you, it was all a bit messy. I was hesitant with this. It's not the best trade in the world, especially as we're trading from the weak internal high. But at this point here, this is where I actually got in. I just set from that low all the way up to, I wanted to cover this high as well. And at the moment, I'm forward testing, entering on the distal, right? I'm trying not to be super refined. I had a 3 pip stop here, had it just a bit there, and then I was tagged in that instance, right? But really what I wanted to see is I just wanted to see this, at least on the M1, this sort of demand failed. We got that movement down and I was happy to trade that short there. So pretty messy entry, not the best in the world. I wasn't really happy trading from like I keep saying, this week. Let's get rid of this 4 hour zone just to clean up a little bit. That weak small internal M15 high, bit of a mouthful. But yeah, with the clear liquidation, with the momentum, another liquidation, selling off again right at Frankfurt Open. Yeah, I kind of was happy to accept the risk in this instance and ended up taking a -1 hour loss. But it is what it is, right? It's not the end of the world. Just trying to get this play forward, but it's not. It's kind of frozen. So let's hop back up to the M15 in this instance, right? And then let's reassess, because that's what you always want to do. Go back up to hard time frames. Don't get lost in the M1, and don't sort of keep chasing. That's what's going on. Seem to be locked in drawing mode for some reason. Okay, managed to resolve that. But yeah, so now in the M15, right, let's reassess. So it's deleted some of my drawings, unfortunately. Just going to quickly redo this, right? So we're aware of the small internal structure, right? The small order flow. Maybe I'll just quickly draw on, these ranges so you can kind of see what's going on here from a visual perspective, right? We have this demand range, price initiated out of it. We then, if I zoom in, we got the chalk, but remember that at that point was just what? Just to facilitate the pullback into demand. We then tried to short against that, and then it stopped us out again, right? Well, not again, but that's basically what we're trying to short is against this order flow. Now, obviously, it's not always going to hold. Sometimes you can trade against it. It's just, again, the risk you have to accept. So now we have essentially this new demand range here. So if you kind of want, again, wait for that confirmation, wait for the high probability thing, what should you wait for? You should wait for the disruption of this bullish order flow, right? So you want to see if price spikes through it, then that's demand failing, supply starting to take control. But if you want to see a true structural shift, ideally you want to get that candle closure as well, right? And then what do we expect? Then we expect those bearish ranges to hold until it takes out the low, right? Hopefully you guys are really starting to get that by now. So we push a little bit higher into the zone. Of course, you can look for M1 entries from within here if you get your M1 entry model. But at this point, if we fast forward it a bit, it actually shoots down pretty much straight away. So I think there was a few M1 POIs we'll take a look in a minute at this point. But again, it's very similar to here. Where is price? Well, in this very specific instance, we're already within demand, right? We're within the wick. We're right near this strong small internal low. So if price was to come back up on the M1 at this point, is that going to be ideal to short against? Not really, is it? Because we don't know if this is going to continue, right? And push up higher. So in this instance, this is where I just waited and I wanted to see price push down through here. Okay, so if we fast forward this one more candle, now you can see as it forms, that was the order in which it happened, price came down and then it spiked back up. Now, the moment price wicks that low, in this instance, that was also a change of character. That was an M15 chalk. So as that happens, what do we have? We have an M15 supply zone here, right? The bullish candle engulfed by the bearish candle, essentially giving us a confirmation entry of that M15 there. So if you're quick and if you want to enter on the M15, this is just one star I wanted to point out, right? Depending on if you want to enter on the distal, 25% of the EQ, whatever. Let's just keep it simple on the distal. If you're quick, obviously the supply zone is valid once you have the bullish candle engulfed by the bearish candle, and it becomes a strong supply zone when it breaks the chalk line, right? Because it's broken some form of structure. So in that instance, like, you should have your alert set, your alert goes off. Okay, now if it's within your plan, of course, you can set an entry order on that M15 zone, right? And that was one quick order in which you could take. I'm not going to play it all forward now because I want to go along with the M1, and then you can start to target here or take partials or however you want to trade, right? So that was one sort of M15 confirmation entry you could take, and also, of course, the risk entry as well. So do not turn your nose up at these sorts of trades. So yeah, that's kind of how you could have got on the M15. Now I'm just going to quickly show this, bring this back one candle just to kind of show you the M1 at the same time, and let's talk through that. All right. So obviously this wouldn't be an M15 zone just yet until this low here goes. So yeah, as I was saying on the M1, let's see where there would have been an entry. So that would be your M1 change of character here. So the reason why I wasn't interested in looking for shorts at this point, remember, this was that strong M15 internal low. You essentially have M15 demand that broke this high. Like, I don't want to be shorting through this. So I just rather just wait for this point. If price had come up here and then given us the M1 entry and I can get in before the pullback happens into this strong low, like into the M15 demand, then okay, then I can take it here because then I can remove my risk. But at this point, when I can actually try and get into the market, we're already down here, we're already in this level. So it doesn't make sense to me. I'd rather just be patient, sit in my hands, there's nothing that clear or obvious here, and wait for that movement and then wait for the pullback and then reassess, right? So hopefully that kind of makes sense as to why. So once we start to set off at this point, we've got the M15 change of character. So if I quickly just jump back up to here and put on that M15 POI, right? Ideally now, I want to be looking for shorts somewhere within, this blue box. So jump down to the M1. What do we have? Well, this is pretty much just one swing leg down, even on the M1, right? That's pretty much just one clean leg down there. So we've got multiple POIs to choose from, which is never ideal. So just kind of drawing the POIs I was looking at. Obviously, we have the M1 extreme. We then have this unmitigated pivot as well, okay? And then we have this level here. So ideally, we always want to be shorting from the extreme because that's going to give us the highest risk to reward, and it's right at the point of invalidation. So i.e. what I mean by that is if we take a loss here, well, it's wrong anyway, and we're pushing up higher again. Whereas you could take a loss here, take a loss here, and take a loss here before the real move goes. So that's why you guys should know that why ideally we want to be on extreme. This zone here, sort of more the decisional, it didn't sweep in liquidity. It does have some nice inducement there, which is a bit better, so on and so forth. So this is basically how I personally had it mapped up at this point. And the way I approach this is I just set my alert and I wait for price to come in, and I'm going to look for my M1 confirmation entry from there. And that's what I was looking to do. Some of you may want to use seconds, whatever, if you want a bit more confirmation. That's the way I was approaching it, okay? Because I had no idea which one was going to hold. Now, the other thing you can kind of do, and I can see, I won't necessarily draw it on until after the fact, but I'm aware that you can also paint a story how there's a bit of a supply chain going on here. So we have that reaction. We have these buy to sell wicks, right? Obviously as well, if you draw it from the pivot, it's quite hard to draw this all quickly, but we also have, that flip there as well. But you can see that price came down, right? After that pullback was created, price came down, and then on a lower time frame, those buy to sell wicks, what did it do? Price pulled back up and it mitigated that M1 supply range, right? It's quite a tight range, and then continued down, then came up, and then continued down. So if you kind of follow that series of mitigations, then you can refine your zones like that, and then you can have more confidence trading from this level. So I can see that I didn't necessarily mark it out until after the fact, but I didn't know whether this was going to hold or that was going to hold. That was still a pretty clean level. So I don't have confirmation. Keep it nice and simple and just wait for a CE from that level, right? So I know some of you set an order here. That's cool. Some of you look for seconds. Obviously, you want to include that wick, and price did contain it. So now I'm waiting for a confirmation entry. So where would I have to get involved? That would be the chock I need. Now, even if we came down and kind of gave us that shock, do I necessarily want to get involved? Probably not, because I want to get in up here. I want to get in the start of the movement, and then it gives me enough risk to roll down towards this low, right? And when it was like this, I knew it was probably unlikely I was going to get an entry. So then we come down. I just don't have interest at this point, and just continue to sell off, right? I don't think there was an entry anyway. Now, what I like about this is now we have a lot more to work with, because rather than kind of just one big leg like this, where there's kind of multiple POIs and something clear, now we've had a significant pullback and a push down. What do we have? We have a new clear structural range to work with. Okay, so it's a bit more of an accurate level to work with. At this point, I'm viewing it as quite unlikely price is going to come all the way back up to here. I'm aware of it, and I'll be happy to look for entries if we do push deeper up into this M15 POI. But really, now my main concentration is this being sort of basically that strong M5/M1 high, and I'm looking for price to come in and looking to get short. Okay, so for me personally, I was happy to set a risk entry on this because everything is aligned, right? We've come up into our strong M15 high. Remember, we've now had a lot of momentum selling off as well, but more specifically, more sort of mechanically, we have the internal structure. At this point, we now got a break and close below that internal low. So now the small internal structure is realigned bearish with the overall larger internal structure. So now we have true structural alignment when we get that break and closure below, and now we're looking for what these ranges to hold until that low goes, or there's at least decent risk reward into these levels where we may see a bit of a reaction, but ultimately we expect this low to go, right? Okay, so now I'm happy to set a risk entry on this level here, which spoiler alert, don't end up getting tagged in. And again, as you guys should hopefully know now, I'm forward testing as current date of recording, just entering on the distal of pivot candles, right? So I'm not refining it to the EQ or doing fixed pips. I'm literally just doing this every time and seeing how I get on with that for now. But yeah, hopefully the main lessons I want you guys to get right is waiting for that confirmation, waiting for clear ranges when it's a bit more clear of where you can enter. So yeah, we come back and we start to spike. So even at this point, it's very, very unclear, right? Just waiting for price to come in. Also, the other thing I want you guys to be aware of is M5 entries. Things can help you really either to enter directly on, keep things nice and simple. It really cleans up a lot of noise, right? We pull back, we come down. So what do we have? We have a nice M5 POI to work with. I can get it to come up. All right. And you can just literally enter in here. Again, whether you want to enter on a distal, whether you want to enter 25%, EQ, fixed pip, whatever you want to use. I really try to preach you guys to try and get consistent on these sort of timeframes first, the M15, then the M5, before trying to do the M1. It just cleans up a lot of noise. And if not, maybe you don't want to listen to me, that's cool. At least you use the M5 to help you clear up like the M1 in terms of where you want to enter on the M1, right? If you have this level here, then you drop down to the M1, and that can give you a lot more confidence of where, the sort of POIs you want to be looking at, and you don't want to be, for obvious reasons, shorting from a level like this with the risk entry, right? This is what we want to wait for. This can help you to see where the true M1 sort of swings are, where that protected high is going to be. Yes, there's equal highs behind here, which isn't ideal, but I prefer personally to focus on structure first and foremost, then supply and demand, right? And then liquidity last. So I'd rather react to those being swept than anticipate they're going to go. Otherwise, you can miss a hell of a lot of moves in those instances, okay? So yeah, so I didn't get tagged into this. Now I know some people were kind of looking at trying to trade like this within here, but this is the range we got, and then we've come up, right? So that's then your internal high that you would need to see go. So we're just trading between those highs and lows at this point. Like this is just mess. Then we kind of spike it. So maybe then at this point you could, I'm not even going to encourage that really, because it doesn't make a lot of sense to me personally. But yeah, definitely shouldn't be looking at this high here, because at this point you're trading behind this, you're trading within this bullish leg, right? We've come down, that's the bullish structure, we're pulling back, that's the weak internal high, right? So we would expect that high to get broken because this high has not taken out the low, right? So you do not want to be trading short from here. Yes, it broke this level, but that's like the internal of the internal of the internal. At this point, this is bearish, you're looking for that, and then this, the bullish internal structure, has pulled back, and now we're expecting that high to go. So maybe once this high has been spiked, yeah, maybe you want to be super aggressive and look for entries within here, but I'd recommend it. I wouldn't recommend it necessarily. You either want to wait for this level here to be hit, and then wait for like a true confirmation entry if you want a bit more. That makes a lot more sense, or you've already entered on the M5, which would clean up a bit more of those candles, right? So yeah, I was just waiting to be hit, price ended up chopping around, and then eventually went off at that point. And then continued selling off and dumping. So yeah, that's pretty much it in terms of the session. At that point, price sell off aggressively. So it's pretty frustrating when you take an early loss, which is fine. I accepted the risk. The thing I try and say to you guys is like, or I try to say like, I never try to say you should or shouldn't take a certain trade in this instance, right? In terms of looking for the short from here, it's more just as long as you understand and you're aware of that negative confluence and you went into taking this trade with your eyes wide open as to the negative confluence, then that's cool. But it's more just like, yeah, I just want you guys to be aware of it. Maybe, you didn't have that kind of deeper understanding of internal structure at the point. But if you kind of knew that and you're accepting the risk of trading against this mitigation and getting short here, then that's absolutely fine, right? That's, how we want to be trading. We want to be trading with, knowing all of the evidence on the table and weighing that up. So yeah, and then once we kind of got that breakdown, then everything was a lot more aligned. If you took a risk entry there, fine. For me personally, I didn't have confidence in which POI was going to be hit. So if I was going to set a risk entry, it would be on the extreme, if any. Otherwise, I was waiting for the M1CE, didn't get that. But then once we have that kind of clear structural break to the downside, essentially that M1/M5 range, now I have a strong high to work from within, so I'm happy to set a risk entry. Just didn't quite get tagged in the situation. And for me, it doesn't really make sense to get involved in here. You can take a lot of early losses. But that's just the way I see the market anyway. And that's it really. It kind of brings you towards the end of the session. Obviously you may want to take some profits, because whilst everything is aligned, and of course like I was saying, there is the potential that 4-hour swing lower high could be in place, ultimately you're trading against swing structure. That higher low could form at any point. Also, you do have some levels of demand within here, which ultimately we expect to break, but you just, it depends on how conservative you're going to be, right? Whether you want to take partials there. I'm just going to bring price to where we are. But also today we have the ECB rate announcement, literally in about an hour or so. And very often volume will just die and price will start to range as people are exiting their positions. And that's, another instance in which you may want to decide, okay, I'm just going to exit full volume at the end of the session because there's no point in risking what profit I have on the table, right? Which is why we're probably seeing price mess around a bit, sweeping that sell side liquidity and coming into this extreme here, right? But yeah, just thought I'd kind of make this into a bit of a longer video to really take our time, build it from the ground up, talk about a few different concepts there, but with the heaviest importance on how to utilize your deeper understanding of internal structure to really kind of help you make decisions, or at least be aware of why certain setups in case-by-case scenarios don't play out, but in other instances they do. Because understandably, a lot of people can be scratching their heads as, why do sometimes I wait for an M15 chock? Why do sometimes I don't? Why do sometimes I wait for the IBOS, right? But it's very hard to give you crystal clear answers because it's always a case-by-case basis. And how is the structure setting up? How big is this range? Like, is there a risk reward for me to short into the small demand range first? Otherwise, if it's already in here and it's mitigated it, then like me trying to get short against that is probably a dumb idea. Whereas when you then wait for true structural alignment, okay, now it's time to put your foot on the gas and try and get that short from within there. So hope you took some value from that, guys. And as always, watch this as many times as you need. Like, watch it really slowly. if you still have this price action data when you're watching this, I'd really try to recommend you mapping this on your own charts and making notes and drawing it all out, and just really try to understand that systematic framework that we use. And as always, I try and encourage you to take M15/M5 entries directly, as I think it can really kind of help you to give you a bit more confidence and try and get some scores on the board. All right, guys, cheers.